This is a candlestick. If formed in a specific formation, it can show you what the market is hiding from you. But what if I told you how simple it is to catch the right side of the market with 90% accurate, and make you aware that most of the candlestick patterns you know is a lie? Hammers, dodges, engulfing candles, all of it, none of this will work unless you pay it with this secret trick. Most retail traders try to capture the daily buyers with extremely difficult strategies that ultimately fail. But what if I told you there's a strategy you can execute in order to know where the next trading day will head to? Every trading daily candle you see is one of these three types of candles: indecision candles, control shift candles, and strength candles. Let's start with the most powerful one, the strength candle. These candles have large bodies and small wicks. This is a strength candle and shows that buyers or sellers are in complete control at this time. But this candle can get even stronger. For our strategy, the strength candle must have a large body, lower wick and upper wick. The bigger the candle is a good sign of its momentum, as it shows that buyers had absolutely no resistance from sellers. This is the exact opposite for bearish candles. If a candle is large red body with smaller lower and upper wicks, that also shows sellers had no resistance from buyers. Now these candles occur frequently on charts, and if seen with the right context, they show extremely buyer or seller control. Okay, if we now understand the strength candle, let's define market context. That brings us to candle number 2. This is the first candle that appears prior to the strength candle. It is usually the first sign who is losing the battle and who is about to take over. These are called control shift candles. To validate them, they should always have wick on both sides of their body. These control shift candles are always smaller than strength candles. It doesn't matter whether this daily candle is green or red. The real story is on its high or low. Oftentimes these candles occurs on reversal points or just before the market make explosive moves trending. When control shift candles is paired with the strength candle, that will completely make you a 90% accurate trading beast. For example, if the daily strength candle closes above the high of the control shift candle, this shows us buyers have won the control game. The next daily candle will be attracted to hit the high of the strength candle. So let's put all what we've learned together to the test and do a real chart live example. Before we get onto that, let me show you something. A profitable trading algorithm called STOPHUNTER Pro. This trading robot took a small $1,000 account and grew it into over 500,000 in just 5 years. It's designed to catch the exact stop hunts market makers use. Here's what you could have got on a $100 account. We are going to use the previous quarter, which is May 2025, right up to the time of recording this video, which is 18 August 2025. So I'm going to start off this test right in front of you so that you'd see we are risking 5% of the $100, and this is what we were going to get. $100 initial deposit, and then we were going to get 291 is our profit. Here is the profit by month ratio. If you need this particular trading robot and you're serious about leveling up your trading, fully automated and no stress, no emotions, use the link that I've left in the description box below to get your 249 lifetime copy. Now let's take a control shift daily candle and couple it with strength candle. These two candles shows that we are in a bullish mode, and we expect that the following daily candle has a bullish bias that has a probability of hitting the high of the strength candle. This ultimately opens up to the secret principle that states that whenever we see a daily candle closing above the high of its previous candle, we expect that the next candle will move and hit its high. The opposite is also true for the bearish side. Let's look at the GBP NZD daily chart. This is a control shift candle and this is a strength candle. This is because this candle closed above the previous daily candle high. The next daily bias after seeing this is bullish, and entry on smaller time frame will be made and exited at this high. Let's have a bearish example. This red candle closed below the low of this candle. Guess what? The following day blasted the low of this red candle. Now I want you to drill on this small chart. I'll keep quiet and you will anticipate the next daily bias. Then afterwards, I'll give you a tip on entries. With all that said, there is a key thing you should understand. You should never enter purely based on a candle. For example, you shouldn't enter purely at open of the next day, but at a directional smaller time frame pattern like M5, M or W pattern. This allows you to enter at the predicted daily low right up to the prior strength daily candle high or low. Implement this and you will see your take profits get hit more often. On that note, check out our free Telegram channel. I'll leave the link in the description box below.